What's going on, y'all? Thank you for stopping by the channel. Hey, listen, I got a question for you. But before I ask you that question, still got the sweater on. It's a little cold outside. Crypto winter still going. I gotta stay warm, you know? Are you ready to unlock the secrets of cryptocurrency trading, where fortunes are made and lost in the blink of an eye? Well, today we're gonna embark on a journey into the thrilling world of these digital assets, where knowledge is power and opportunities are endless. Now get ready, because we're gonna dive into the deep art of trading and discover how SWYCH's perpetual DEX is changing the game. But first, we need to master the fundamentals that every trader should know. Let's talk about it. Boom. Now before we move forward, we have to make sure that we have background knowledge and understanding of this whole body of work in context, because you know, education first. Now first off, none of this is financial advice. It's really about education. You might get a little bit of entertainment, but this is mostly about education. Now for me, I don't consider myself the best trader at all. I mean, I know enough to get in, get out if I need to. You know, one day I'll be great. I'm still a work in progress. Either way, it's enough where I can still educate you on the basics. So let's start with the basics, candlestick charts. These visual representations display price movements over time. Now, bullish candlesticks, like this one you see right here, suggest buying pressure and potential price increases. In contrast, bearish candlesticks, such as this, indicate selling pressure and potential price decline. It's important that you at least understand this. There's so much more to it, but you need to, at the minimum, understand how candlesticks work. Each candle on a candlestick chart represents a specific time period, such as a minute, an hour, a day, or a week, depending on how you set up the chart's time frame. The candle has two main parts, the body and the wick. Let's talk about the body first. The body is the rectangular area between the opening and closing prices for that time period. If the closing price is higher than the opening price, the body is typically colored green or white, which indicates a bullish candle. If the closing price is lower than the opening price, the body is usually colored red or black, which indicates a bearish candle. Now let's talk about the wicks, or shadows or tails, that's what they can call it. These are the lines that extend above and below the body of a candle. They indicate the highest and the lowest prices traded during that specific time period. The upper wick shows the high price, and the lower wick shows the low price. Candles and wicks provide valuable information for traders and analysts. They help in visualizing price action, identifying trends, and making trading decisions. For example, a long upper wick on a bullish candle may suggest potential resistance at that level. A long lower wick on a bearish candle may indicate strong support. So patterns formed by consecutive candles can signal trend reversals or continuation. It's important to note that analyzing candles and wicks in conjunction with other technical indicators and chart patterns can aid in making informed decisions about when to buy or sell your assets. If you've been in this game, in this industry for some time, you understand how the news and the sentiment can affect the market. Positive news often leads to bullish sentiment, while negative news creates bearish sentiment. Buy the rumor, sell the news, right? So understanding sentiment is crucial when deciding when to make your trades. Now let's talk about leverage. Leverage allows you to control a larger position with a smaller investment. It magnifies both your gains and your losses. Remember, leverage requires effective risk management to protect your investment. Always have a plan, y'all. Know how much you're willing to risk. Create a stop loss. You shouldn't just jump in without the proper education and plan, because you're gonna be very upset and disappointed, and you're gonna be let down when things don't work out the way you hope it should. Then you're gonna be mad at everyone, and you're gonna be a big sourpuss because you should have listened in the first place. You know, there was a voice in the back of your head telling you, but no, you want to be a risk taker. Nothing wrong with that, but just be accountable for your actions and stop blaming folks. Stop coming in the chat, always spreading your negativity, beating everyone up with your words. Obviously, you know I'm talking about some people currently that's in crypto. I mean, it just comes down to taking accountability for your actions and not blaming anyone else. Because at the end of the day, it's your decision that you make. Let's move on. When trading, you can take either a long or a short position. Going long means buying with the expectation of the price going up. while going short involves selling with the expectation of the price going down. You can make money in both ways, but both have their risks and both have their rewards. So choose your strategy carefully, okay? Options trading in crypto is similar to taking long and short positions. Long calls, short puts, and more. Options trading in crypto shares similarities with traditional option strategies, but there are key differences to keep in mind. With that being said, I want to explore the SWYCH perpetual DEX. SWYCH offers traders the opportunity to take leveraged long or short positions in crypto. Now, with the unique features that SWYCH offers, it stands out in the world of cryptocurrency trading. Now, I've done trading on other DEXs on other platforms, but they did not have trading view specifically as the main interface. For me, this is one of the things that I love about the SWYCH platform because of all the features that you have available to plan your trade. Let's look at it a little bit more. This is how the platform looks when you want to get into a trade. The options that you have available, as you can see, you have Bitcoin, BNB, and Ethereum currently. So you just select the crypto that you're interested in. And as you can see, you can change the chart right here. You can put it on a 5-minute. You can put it at a 15-minute, 1 hour, 4 hour. And then you can click here and 1 day. And you can highlight the ones that you actually want to show, right? You have the options. I want to make this full screen. Of course, you have all your options over here as far as when you're creating. Let me take it out of full screen. You have all of your options here as far as when you're trying to decide what trade you want to get into. You can draw your trend lines. You know, you can get into the fib retracement, get all those different patterns and just figure out what's best for you. But these are all the options that you can see over here. This is what TradingView gives you for free anyway. And so there's a lot that you can make happen over here. You know, this is just really about making the adjustments to the actual platform so that it suits you. But let's just get into where if you wanted to do like a long or a short position. So right here, you see, you can choose whether you want to take a long or a short position on Bitcoin, right? So currently at the time of this recording, Bitcoin is at 26,005. And if we change it to, this is the 4 hour, because if you're like trading and you want to see what's happening, so maybe I want to put it at 15-minute and zoom in a little bit, right? But you can go back and forth between the 5 minutes, so you can determine, you know, exactly what's happening. You know, there's the candlesticks, and so at the 15-minute in the last, because these are 15-minute, that's what these candles mean. So 15, 30, 45, and almost the last 45 minutes to an hour, it's on a downtrend. And so, you know, it's up to you to decide. But if you wanted to come in, let's say you had, and these are the tokens that are available that you can use for trading. So let's say you had some BNB. Let's see if I can use BNB. So like, let's say I wanted to use, currently BNB is a little over $200. So if I want to use half, do 0.5 BNB, which it'll tell you it's roughly $104. And so my position size at 2x leverage is, I'm working with $208. But you know, currently the leverage is up to 30x, which is, you lose your money real quick. But I mean, or you can gain your money real quick. It all depends. If you did like a 10x, so now you're using $104.56, but your actual trading position is at 1,035. That's 10x, right? And so you can see it right here. It shows your entry price. It shows what your liquidation price would be. And what that means is that since you're in a long position, if Bitcoin was to drop to 24,000, then you would get liquidated. And quite the opposite, like if we chose a short position and we decided we wanted to use BNB 0.5, which is roughly $104. Boom, and we did a 10x. And so if we're shorting Bitcoin, that means we expect it to go down. If Bitcoin goes up to 28.8 currently, then at that 10x leverage, you would get liquidated. That means you would lose your money. But you can avoid those by what's called taking profit and setting your stop loss. So currently, you know, in the last hour, Bitcoin looks like it's on a downtrend. And so if I wanted to take a short position on Bitcoin at a 10x leverage, which means I'm using $1,000, I can set my profit and my stop loss. I also executed a trade using my cell phone. I took a long on BNB 10x. At the time of the recording, BNB was around 213, and I did a long on BNB at around 213.77 10x. I just used $21 really just to test it. It went through flawlessly. Fees were low. Transaction executed in about 30 seconds. As you can see right there, it went through. And I set my stop loss. I set my take profit at around 230 and my stop loss at around 210. At the time of the recording, of course, I envisioned BNB to go up. And so you can see it right here, where it has my expected profit and loss, my collateral size, the leverage at 10x, take profit, entry price, liquidation price. Now it's your turn. Remember, manage your risks and trade with a plan. Cryptocurrency trading involves understanding candlestick charts, sentiment, leverage, and the choice between long and short positions. Remember, exercise caution, stay informed, get out your feelings, get in the game. Three types of people in this world: those who watch things happen, those who make things happen, and those who say what happened. Hey, listen, thank you for stopping by the channel one more time. Remember to smash that like button, share this with someone who you know may be interested in. Let's trade together. Catch y'all on the next one.